Welcome, members and guests, to the February 19th, 2024 meeting at the International Model Investment Club. My name is John Catterson. I'm the Vice President of the club, filling in for our president tonight. And on this first page, you can see some URLs for our YouTube channel, our Facebook page, and our page on BetterInvesting.org. Here's some background on our club. We were founded in May 2016. We're a Better Investing Model Club, open to the public. We have monthly meetings, and they're held on the third Monday of each month. In December, we held them on the second Monday of the month due to the holiday season. We use hypothetical money, which so that means not real money, which avoids issues with currency exchanges and taxes for our international members, as well as we're coordinating with our international and national and U.S. members. Our primary role is to be a learning lab. We try to use better investing to learn better investing principles and the fundamentals of stock investment using the online stock selection guide, and to learn how to manage this club's operations through My iClub. All meetings are held online, serving visitors and guests and members from around the world. And we're an international community. We currently have 12 members from the United States, Canada, and China. Now, we'll go over some meeting conduct. The agenda is available in the handout section of the control panel. You should see, if you're a guest, a control panel that popped up for you. And in the handout section towards the bottom, you'll see our agenda. All visitors and guests will be muted during the meeting and may post questions in the questions section, again on the control panel. You'll see a question section. At the end of the stock presentations and some other information, visitors and guests will be unmuted and ask for their comments and questions. You have a period to give comments and questions. Meeting segments are timed. Alerts will be given signal when the segment is near the end and when finished. And you should notice some of that as we go along. Here's our disclaimer. I'll just read this all. Number one, the information presented is for educational purposes only, is not intended as a recommendation to buy or sell securities mentioned. Two, the views expressed are those of the participants only, do not necessarily represent those of Better Investing. Three, investors should conduct their own research and analysis before making any investing decisions. Four, securities discussed may be held by representatives in their own portfolios. And five, the presentation may contain images of websites, products, or services that are endorsed by Better Investing or the presenters. And six, the meeting is recorded and we posted to our YouTube channel. So there you are on the first page. So now I believe Joanne is going to move us over to the agenda, or we can just go right to, I think, if you check your agenda, you'll see the next thing is the Treasury Report by Reddy. So I'll pass it off to Reddy to present his Treasury Report.
Do you want me to make Reddy the presenter?
Whatever you two think is best, Joanne and Reddy, whatever you think is best for.
I'm making you presenter.
Okay, you do it.
Hello, can you see my screen now?
See your desktop with all your icons.
There you go.
There it is.
Okay.
There it is.
I have two screens. Okay. Okay, this is this month's Treasury report I prepared today. This is the summary of all monthly transactions. It shows that on the behalf of 12 members, few months ago, I decided to deposit the amount before the meeting, so we know how much money is available to buy any new stocks. I deposited this money. No buys last month, no sells last month, and no payout last month. As of today, we have a balance, including this month's deposit, $8,400. Okay. This is the picture as it shows now. We have $8,400 cash for you to consider buying new stocks. Um, this is the portfolio. This is much better than we had last month. There are only 2 reds you can see, and most of them are positive because this month we are doing good, or the market is doing good rather. Okay. This is a summary of, I listed here only 10% or more gains and 10% or more losses. So losses went down by 1 instead of 2, and gains remained about the same. So this is summary of the gains and losses. And I think this month we are doing good. This is a summary. This is compared to last month. This is much better picture on the left. Okay. Because January is not that great, and we made a good gains this month. We still have a lot more to catch up, and I hope we will do that. This is club performance compared to other indices. Next one is, I included this slide just to remind, and believe me or not, it worked. Couple of members immediately responded saying that they updated the stocks, and I updated today as a result of that. I think this is a good way to remind. Haney used to send email. Okay, this caught the attention. So this is the slide which tells who is following which stock, what is their latest update. Okay. If you have any questions on this one, please send me email. This is the summary of our portfolio review. There are few yellows. We can think, but Disney is a kind of a strange, and rest of them we are doing okay. If somebody is more up to date and knowledgeable and current, can they make a few lines, guidelines, how to interpret all these numbers? I used to study, but I forgot all that. What is the pink means, what the yellow means, and when we are doing good, when we are not. Okay, just a few, 5 sentences, 10 sentences, that will be good to interpret this one. Otherwise, I had to go into detail and do some research and do that. Next slide is the companies that we hold. I updated this based on today's input, and we hold about 10% cash we can spend today, especially considering in between the month period suggestions for buying stocks. I'm not sure if any is in this meeting, but it's a good time to consider because we have a good amount of cash. This is the sectors representation. Our health sector got reduced because we sold Vetex on last month's motion, but still communication is largest, and healthcare is somewhat largest. But we are okay. We are kind of fairly distributed. And next is industries. We kind of have fairly diversified. My next slide shows which industries we are missing. And here is the one that shows small cap, big cap. This one I included the guideline. Guideline is large is 25, small is 25, and medium is 50. So so that we can always think about our distribution compared to guideline distribution. Okay. Next, I included this one for first slide. It caught my attention today when I was going through all the various features the club has. I think you see this peak because Joanne knows all the history. She and myself went through. This is because the previous outgoing members were not paid, and she has complete history and meticulous history. we paid off, and that's what this bubble is. Okay. So that's my summary today. Any questions?
Thanks, Reddy. Let's see. I will
Yeah,
take back.
Yeah, a lot of credit goes to you, Joanne.
Yes. 1 minute, please. Okay, I'm going to take the screen and we will go to our stock setting. So this month, Piero and I, we took after the last conversation with Bakul last month, we talked about finding stocks that are at the bottom, at the 52-week low. So, or finding stocks that are at their low. So we actually found a couple stocks, and they were also in the medical instruments and supplies industry. So we're going to go through the 2 stocks that we identified. So we're going to first go through the industry overview, trends and challenges. Why did we pick this sector and companies? And the 2 stocks that we found were Atrion, ATRI, and Star Surgical Company, STAA. So this is actually, this is the 3rd time we've done medical instruments and supplies industry. So this will be a quick review. So healthcare, the sector, this is actually, the industry is in the healthcare sector, which is 10 billion of the S&P market cap and 18% of the US GDP. So it's a very large sector. The medical equipment and supplies account for 955 million, and the US makes up 45% of the worldwide medical device market. So the medical equipment and supplies industry, they research, develop, and produce non-electronic medical, surgical, dental, and veterinary instruments and apparatus. The industry does not manufacture electromechanical or electrotherapeutic apparatus, X-ray apparatus, or ophthalmic goods, which is interesting when they say ophthalmic goods, because my product is actually a lens, eye lens. So, so the key tech industry trends to watch: rising tariffs, heavy government regulations, group purchasing organizations, logistic medical supply companies, and in the industry in the industry's favor, there's a rising prevalence of chronic diseases, and we'll see that in my particular product, they're addressing the prevalence of myopia, and there's increasing number of surgical and diagnostic procedures. So additional trends and challenges: Internet of Medical Things. You'll see things that are more connected through the internet. And in terms of additional costs, there's availability of big data to smaller companies, increasing use of AI in design and manufacturing, a need for more technically skilled workers, and for individual customers, high cost of devices. And that's because of all the development in technology. Medical equipment and supplies is a fragmented industry. Morningstar lists over 1,000 companies. Charles Schwab lists almost 2,000 companies, and 98% of companies have fewer than 100 employees. So these are some of the financials for the industry. The revenue, 263 billion, earnings 15 billion, PEs 25.9, ROE 8%, gross margins 34%, net margins almost 6%, total debt to capital 22.6%. And we'll actually look at, I pulled up an SSG stock comparison guide, and also put it up against the industry, so we'll be able to see how that looks. Oh, sorry, jumping ahead. Am I going backwards or forwards? Okay, Piero, it's all yours. Do you want to take the screen or do you want me to drive?
Well, Joanna, I think you can drive from there. I'll just tell
Okay.
you which screen, okay?
You just tell
Okay.
me to go. Okay.
Okay, so this is Atrion is the one that we looked at. This is the company that we found at the 52-week low list because it's a nice hunting ground. There are some risks involved, but anyway, we'll get into it. Next screen, Joanne. Okay, the company was founded in 1944 and it's headquartered in Allen, Texas. Okay, they have a number of products that they produce. They're specialized. This is a niche player. They pick various little sections, niches of the medical industry. That's what they specialize in. They produce products for that niche section, and they also produce services, give services as well. Cardiovascular products for the heart, ophthalmic for the eyes, and fluid delivery products. Okay, next slide. Okay, yeah, no, there it is. This, the first big product here on the top is called the myocardial protection system. It's a computerized heart-assisted device. During open heart surgery, the heart requires a certain number of medications, nutrients, so on and so forth. This all automates it. And then here in the middle, we have catheters, valves, syringes that are needleless syringes. They provide fluids without the needles. Then they have a pressure gauge devices, and then they have what are they called? The ones that you do the angioplasty, the catheters. At the end, and at the bottom there are ophthalmic devices, a kind of long lance-like things that you use to operate on the eye. Used to open up eye ducts and all that kind of stuff dealing with the eye. Next slide. The services that they provide engineering, product design, and development. Because they're such a niche player, they specialize, they have they talk to other manufacturers in the medical field, not necessarily in that niche, but because they have such expertise, they can help them design and engineer a product. They prototype it, assemble it, insert an injection molding, making plastic molds of the item and before producing it. The RF welding, radio frequency welding, ultrasonic and heat sterile packaging. The interesting thing about this company is that their facilities are registered with the FDA. So their facilities are clean and approved by the FDA, Food and Drug Administration. That's not always the case in the medical field. Next slide. Let's see, ATRI is a comparatively small company in the medical products industry. It's a leading manufacturer in product market niches, including soft contact lenses, IV vacuums, valves. ATRI is also a leading manufacturer of valves for inflation devices of the marine aviation markets. So what the company does, since they built up such an expertise in valves and other fluid and air gas moving products, they tried to increase the amount of customers that they have. So they went to the aviation field, they went to the marine field, so that they're using products to supply valves for life vests, inflatable boats, anywhere else that they need to control air, an amount of air, or have a valve involved in there somewhere. They're that good. Market needs with innovative solutions. Yeah, they market. Let me see, Atrium's proprietary line of needle-free valves eliminates use of needles in many procedures, cardiovascular market, all the kind of stuff. They have a lot of good expertise. Next slide. Joanne? Yeah. Atrium's survival strategy is to continue product development and improvement of design, increase presence in the niche markets. So they want to expand their presence in the niche markets. ATI has customers around the world wherever their unique knowledge, skill set, products, and expertise are needed. They consult and work with local parties anywhere in the world to solve problems with creative novel solutions. ATRI provides continuing training and support for their customers to maximize the use of their product. Attention to and respect for their clients has led to a very loyal customer base. That's going to be important later on. Next slide. Okay, so why ATRI? Right now, ATRI is a stock of opportunity. It is on the 52-week low list. Okay, so this is, the 52-week low list. We know the price is down. And that's been kind of a problem for us. We buy stocks that are selling very high. And that's the problem with a lot of investors, right? People get all excited when the price starts rising high. Well, by the time that starts to happen, it's too late. You should get in on the ground floor when it's down. Okay, price is unfairly down, right? Niche markets, the products that ATRI produces were simply not needed during the COVID-19 crisis, right? The hospitals delayed many surgeries, elective surgeries, in order to make room for the suspected COVID-19 cases, which generally do not need Atrium's products because of the COVID-19. Now, also what happened now is that, the customers for Atrium, they heard the rumors that, we were going into recession, the economy was slowing down. So they were, they had built up a stockpile of products that Atrium produced. And in the COVID-19 crisis, those products were not used. Now they were reluctant to order anymore because of the economic slowdown. They wanted to work their way through their own inventories before ordering anymore. So that explained a lot of the reason why their sales just dried up. Okay. Future PE expansion, a triple play, right? Price unfairly down, future PE expansion. The PE is generally much higher than 30, which is the current PE, around about 30. Future net profit margin expansion. They just finished building another production factory, a facility in Florida, and they would not have done that if they didn't suspect that the customers were there, the market was there. They just finished paying for this new facility because they know that the market is there and they're going to improve their productive capacity. And finally, the company insiders are buying. They're not sold any stocks in the last 6 months. They're just buying because they know the price is a very good price to buy, and the market will come back for them. Okay, next slide. Okay, strengths and opportunities. Okay, well, the key strength of Atrium is its ability to develop customized solutions for small and large customers quickly and cost effectively. The other interesting thing about this company is that it has no debt. The company itself is worth a total of about $180 million, but it has no debt. It pays a dividend. It's buying back shares. It just slightly raised its dividend a little bit above $2 or something like that, and it's buying back shares, and it has no debt. Now, when you buy a stock on the 52-week low list, the big danger is that that company has debts to pay, and that the debt holder might call his debt and force you into bankruptcy. This company has no debts. It has about $40 million cash on hand, so it could, simply eat its way through that $40 million, however long that will last, and there will be no problem. Okay. Consistent generation of cash flow enabled investment of capital value projects, the $114 million facility I just mentioned in the next point, and a commitment to develop unique, creative solutions to customer problems and to further expand the number and extent of their presence in various niche markets. So they're always trying to increase their customer base. Next slide. Joanne, next slide, yeah. Weaknesses and challenges. They're completely dependent on a normal market condition, When the market is under stress, as during the COVID-19 crisis, when normal hospital procedures were suspended, Atrium devices and services were not needed. Okay, so the market dried up there. The market that they serve is small and narrow. The entire company is worth about $200 billion, maybe slightly less. The resources are limited. It would be good to develop efficiencies of scale, meaning become larger. their business moat is narrow because they have competitors in the field. Next slide. Okay, these are the technical analysis. Some of the analysts that cover the stock don't have any opinion on it. The question mark of whether they're going to survive or not is up in the air. Okay, so the price is about $368, but fair value, as you'll see in the Morningstar reports, they give it a fair value of 520. But Morningstar doesn't give any advice as to what they're going to do in the future. They know that the price is down, it's 368, but they give it a fair value of about 520. Okay. Future PE is going to be about 35. A future profit margin will be about 22%. If the past comes back. Short percentage of float is only about 6%, which is not terrible. When a shorter percentage when the shorts are make up about 10% of the stocks out there, that's something to worry about. Quick ratio is 1.8, and they have almost twice as much cash to pay off debts, which they don't have debts. So cash is all there. Current ratio is a 7.6. They have no debts. Interest coverage, since they have no debts, they don't have to cover their interest payment. Debt to equity, 0. Operating income is, well, it's kind of last 3 years has been negative. COVID-19, we're going into a recession, so their customers are kind of hedging their bets on building up inventories. They're just living off of their inventories. Net income of the last 3 years is about $30 million a year. They're still selling things, but not as much as they were. Next slide, Joanne. Okay, this is the Bakul financial ratios for this company. I mean, it doesn't look terribly bad. The final score is 86, right? And it's pretty close to 90. So it's actually not bad. We had to kind of gross margin was reduced from the usual 50% to 20 because of these are medical devices, and by and large part, they're kind of regulated. The government won't allow usurious prices to be charged, so their margins are muted but not terrible. Next slide. Okay, so Joanne, how are we going to do this? Okay, go my screen. All right. Okay.
So you could go to your SSG now.
Okay.
Yeah, right there. Right to go left. Right there. Oh, no. Left. Right there.
Okay. And the SSG here, I projected from the annual. We could project from the annual or the trend line, because both of them will be the same. If we projected from the latest quarter, it would be way down at the bottom. Then you'd have to assume, huge numbers in order to get them back up to where, right. Okay. So you could project it from the trend line or the annual. And I said the sales are going to grow about 2%, because that's what they've been growing at of late, last 3 years. So just assume the minimal, 2%. Earnings per share is going to grow up about 2.4%. That's what it has been growing at for the last couple of years. Debt, it has no debt. Pre-tax profit margin on sales. Well, the last couple of years, 23, 22%, that's not typical. So I crossed them off. It's typical about 25%, 26%. And if everything goes back, that's what it'll go back up to. The return on equity, again, 13%, 14% is not typical for this company. Is about 15%, a little bit more is typical for the company. Okay. We'll go, well here, Morningstar here, 2-year estimates, earnings per share, long-term estimates, nothing. But they give it a fair value of about $528, right? So they suspect something, and it's currently selling at $530. Okay, valuation and return. Okay, I had crossed off a bunch of values there, but I give it a high PE of about 30 and a low PE of about 24.5. The current PE is 29, and the 5-year average PE is about 37.3. So it's down, slightly down, suggested down. High PEs are consistent. Well, 48, we can cross off the 48. And but they're kind of trending down. So I just set it to 30. And the low PE is kind of also going down. So I set that to about 24.5 to continue the trend. And the top price is about $660. Morningstar says this fair value is about $550. And low price is going to be about $296. That gives us an upside downside ratio of about 5. This is, I think, from the trend line, 5.2. If I go from the annual, it'll be about 5.5 to 1. So the figures are very similar, very close. They pay a dividend, so we get a little bit of a boost there. High PE, 14.5, and the average PE is about 12.4 return. And the zoning is buy. And that's about it for the company. If there's any questions?
I have a couple of questions, John.
It's Piero.
Oh, Piero, yeah.
Piero, sorry.
Yeah.
Piero, this is a very small company.
Yeah.
Very narrow mode.
Yeah.
Only 2 products.
Yeah. No, a couple of products. Yeah. A couple of products, 3 or 4 products. Yeah.
Okay. I saw 2 in the slides. It pays dividend as high as $8.80.
Yeah.
I do not know. The small companies do not pay generally any dividend.
Yeah. Well, their payout ratio is about 41%, but about 59% of their profits go back into the company. So they're producing, they're building their company up, because they just finished building a facility in Florida, which they paid $114 million for, almost $120 million for, and the company is worth about 180, right? So, and they did that, and based on what's happening right now, everything seems to be going down. They did that because they know that the market is there. The market is going to come back. Recently, the last 6 months, everybody is buying. Everybody on the insiders are buying, and insiders own about 16% of the shares in the company.
So insiders of the company own 16% of the company?
16% of the shares that are out there. The rest are owned by institutions.
Okay. What is the total employment of the company?
The company's got about 500 people.
Okay, all medical companies are small, but some of them are really, really tiny, only less than 10.
Yeah, but this company has a presence overseas as well. They get about half of their money overseas, 40%, 44% of their money overseas.
So when was this established? How long ago?
1944.
Wow.
Yeah,
man.
It's been around.
How come it's not growing faster? 1944 is 60 years old.
Yeah, because it's a very niche market. It's a market. It's a small part of the medical market. It's very specialized, and they've been able to make a living in that niche market. You can expand the niche. They're trying to expand the niche. They're trying to go from medical field into aviation, parachutes and life jackets and whatever, and they can go into the naval, inflatable boats. So they're trying to expand their customer base, aerospace as well, because as long as you have to control airflow, gases, fluids, they're pretty good at it. And they can apply that kind of knowledge to the aeronautics, aerospace, and military.
Okay, why is it not able to grow faster over 60 years?
Well, it has been growing relatively well. right? If we go to the front here, go to sales. You see sales, it was historical sales growth. Right now it's at 2.7% because of the 20, 21, 22. The sales were going down.
This another interesting question. Why last year?
Yeah.
It was continuously down.
Yeah. Well, you
Any-
know, yeah, there was another little phenomenon. There was a little while ago, Humana did a big faux pas somewhere. They did something in the medical industry, and it kind of took down the entire medical sector with it. So there's a little bit of pressure there.
do they have any big setback last year?
This particular company, yeah. because the specialized equipment that they make wasn't applicable to COVID-19 patients, right? Remember when the COVID-19 patients were coming in about 2 years ago? The hospitals were emptying out, they were canceling elective surgeries, they were canceling standard surgeries, hip replacements and all that kind of stuff in order to make room for the COVID-19 patients. When the COVID-19 patients came in and occupied the hospitals didn't need the stuff that Atrian was making because the stuff that they make doesn't apply particularly well to the COVID-19 people. So their sales dried up. But, I have a couple of letters from the CEO, David Badat. He says, we didn't lose any customers. No major orders were canceled. But the customers that we do have, they just delayed their orders because they had built up some inventory, and these procedures that would have used that inventory was canceled in the hospital. So the hospitals didn't need the inventory in the customer's warehouse. And then now the problem is global recession. Everything is slowing down. So again, the customers are holding on to their inventories and they're not really ordering stuff from Atrian. And they make a lot of money from the products that they sell. They can mark it up quite well. So just a kind of a combination of events. The COVID-19 shortly after, followed by global recession, dried up their market. People just were not ordering stuff. So this is, it's kind of an opportunity. It's a small stock, and when you buy small stocks, you always have to worry that they're going to run out of cash and they won't be able to pay their debts. Well, this company doesn't have debts. All the cash that they have, and they're still making sales, all the cash that they have, they do it for their own use, whatever they want to do with it. They just built out a facility, they pay a dividend, they're buying back shares, and they're doing it all in their own resources.
Yeah, but I'm curious. This has been in the field for 60 years.
Yeah.
Okay. And still in the similar situation, what is causing it not to grow? 60 years is a long time in medical field. Yeah,
it's the niche market. They just don't want to go beyond that small market that they have.
Yeah.
But Morningstar, I can give you let me see if I can pull up an article from it's First Quest Analyst Report. Okay, well, this is Value Line. Value Line doesn't give any kind of
no opinion.
No opinion, nothing whatsoever. Let me go here.
Does Morningstar have an opinion on them?
Morningstar, yeah, they do. Okay, let me, I guess I can get out of this, right, Joanne? I think so. Let me call this down here. Okay, no, not there. Okay, here it is. Hold on. Okay, Value Line, Morningstar, Quant. Okay. Okay. Okay.
Pero, stock value went down by 100% and 50% during 1 year, this year.
Yeah, but look at Quant's report. This is on released 27th of January, 2024, right? Okay, so the current price is $324, but fair value $549. If
Yeah, but
they know it's a terrible situation, it's priced at $324 now, but they give it a fair price of $549. Why? They know
yeah,
something.
but it's okay. It's a peak
They know.
value was double of 300. Yeah.
Yeah, yeah, they know something, right?
Piero,
Okay.
you know what concerns me about this company?
Yeah.
Even though the sales have not been great in this last year, it
Yeah.
seems though that the pre-tax profit and the earnings are dropping even faster than the sales,
Yeah.
at least according to the visual analysis on the SSG.
Yeah.
They're
Yeah.
not all falling at the same rate, that the pre-tax profit and the earnings are falling much faster.
Yeah. Well, that's because, the products that they made where they make the biggest markup, those ones
Mhm.
are the ones that are not selling. Right.
Yeah,
But
they're
they,
never going to be a big company. They're never going to be a big
no,
company because they don't make something that lots of people use. They're a
that's
business
right.
to business company and they only have a few businesses that they can actually sell this stuff to.
Yeah, that's right.
I think what she said is true in the sense that does it have extremely narrow mode limiting to its a few products for a
Hmm.
long time, not expanding?
Kira, can you
Yeah,
go back to the value line report?
I think it's difficult for them to expand because they are in an extremely regulated industry.
that's right.
And
That's right.
they can't
No,
just come up with stuff and put stuff out there. They have to go through all that FDA stuff to get approved and
Ila,
get, and people to buy it and use it. And it still has to
Ila,
work
Ila,
3 years
Ila,
later
that
and all that kind of stuff.
that's true with every medical company, but many medical companies have expanded. This is 60 years long
Yeah, but
time.
I think it depends on what you make. As a medical device company, it really depends on what you make. If you're
Yeah.
making syringes, then you can make money because everybody uses syringes. But if you're making certain if you're making valves, then maybe not.
Mhm. Yeah. 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 But this company has a history. Look at the price history. It's been valued very much higher than it presently is. And Value Line Morningstar gives it a value of about $525, whereas right now it's about $324. Yeah. So this is the value. Yeah.
Look at the current updated value line report, which has the third quarter revenue. The
Yeah.
third quarter revenue came in at 1.67.
Third
If you
quarter.
go down to the revenue, quarterly sales, go down. Yeah. So
Oh,
the third quarter is 1.67. I don't know about fourth quarter. Have they issued fourth quarter report? I don't know. But
no.
anyway, so if they up to third quarter, assuming fourth quarter is 4.7
Yeah.
revenue, then their sales have dropped by 10%.
A lot. Yeah.
Yeah,
Yeah.
this year.
Yeah.
And
Yeah,
this
but their
is
pre-tax profit and earnings have dropped even, it is a bigger drop.
yeah,
Yeah.
and this
Yeah.
year is already the first year after the COVID, open up of the COVID. So it's
Yeah.
even worse than COVID period.
Yeah. 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 Okay. Now the CEO published a letter here. I think this is the article.
Hmm.
Shucks. Okay. CEO at the bottom here. My computer is acting up a little bit, but let me do this. Okay. Inside ownership, right? This is
Oh,
a report from
Piro, what are the latest news on this? Analyst news.
analyst news on this company. Very little.
I'm sure.
Absolutely. Yeah,
You
very
know what?
little.
The insiders may be buying because the share price is dropping so much,
That's right.
and they're just trying to support the price.
Well,
Well,
Piro said it is 19% by all the internal people, but this is a small company,
yeah, but
less than 500 people.
Hmm.
yeah, but what's it called? With the money that they're putting in their money, their real money, right, on the company. not to, kind of support the company, keep it from going
I'd be
bankrupt.
willing to bet that most of the people that work there have been there for quite a while.
Or not necessarily. They don't have to buy it. They keep their share. What do you call it? Fringe benefits.
Yeah,
They keep it.
and they
Their
want to
values are
protect the company, so they're going to buy shares. But
Okay,
they're
should
trying to
we
protect
move,
the company and
move
keep the
on? Should
share
we move
price.
on because we spent quite a bit of time on this stock, and I know
Oh,
we
we have
want.
more to do. Yes, sorry.
That's okay. I mean, do we feel like we've vetted this, or does it still merit more discussion?
No, I will not ask any more questions, John.
Okay. I know we just run out of time, and then we don't get a chance to vote, and it's
Perfectly right. Perfectly right.
problematic. Okay, so I'm going to take the screen and do STAA Surgical Company. Okay, so STAA Surgical Company is a company that, oops, shoot. Okay, so what do? It was founded in 1982. It's headquartered in Lake Forest, California. So they develop, manufacture, produce, and market the sale of implantable lenses for the eye and delivery systems used to deliver the lenses into the eye. And it's a specialty. It's not like a contact lens. I'll show you later. It's an implantable Collamer lens, which is very like the, it's biotechnically similar to your own, body. So it's the adaptation is, easy for patients to adapt to this implantable lens. So they, it's a manufactures lenses used worldwide in corrective or refractive surgery. Oop, I don't know why I keep doing this. I just need to click. Okay. It sells its products in 75 countries with direct distribution in Japan, Germany, Spain, and the United States, Canada, UK, and Singapore. And then they have direct and independent distribution in China, Korea, India, and France. Okay, so this is what the lens looks like. It's really weird looking. You would think that it would be circular, but it's kind of this rectangular shaped lens. And oh yeah, biocompatibility, that's what they're calling it. Since it contains collagen, so it's you can adapt to it more easily. So one of the biggest features is that there's no dry eye syndrome. People that get LASIK surgery often experience dry eyes. Another feature is that it's removable, and then you have better night vision. So it competes with LASIK and PRK. LASIK is where they use lasers to actually remove material, I guess, surface material from the cornea, and it reshapes it with the laser. And then PRK is also another type of laser procedure, but they don't create a corneal flap. So LASIK uses a corneal flap. So there's actually material from your eye that's removed, but with this implantable lens, this Collamer lens, implantable Collamer lens, there's no material, there's no actual corneal tissue that's removed. So this is the process. The first, you go in for a pre-op eye exam, and then they administer eye drops. They make a small incision. They insert this lens and position it, and then there's a post-op and checkup. And I thought this was interesting. Joe Jonas has gotten this lens, so from the Jonas Brothers. So he says his testimonial is that it was life-changing for him. So these are some interesting stats about the lens. It's or actually the audience. So this is the people that would potentially buy this lens. So 1/3 of American and European adults are myopic, meaning they can see short distances, but they can't see long distances. In many East Asian countries, 80 to 90% are myopic. And I asked my optometrist about this because I'm Asian, and she said, yeah, the Asians have a different shaped, I guess it's a cornea, so they have more of a propensity to be myopic. And then, so it's estimated that approximately almost 50% of the global population will have myopia by 2050, and then not almost 10% will have a high myopia of 5 diopters or less. And this particular lens addresses high myopia. So people with high myopia, they're saying experience diminished quality of life, comparable to those with keratoconus. I think it's because if you don't have your corrected vision on, you pretty much can't see. I mean, you can't drive. You would probably feel unsafe walking the streets if you had this kind of high myopia. And then, so visual impairment from uncorrected myopia is estimated to result in a global potential productivity loss of $244 billion, with the southern and eastern parts of Asia taking on the greatest burden. And that's from a study, this racial and ethnic differences. So to qualify for this lens, you have to be between 21 and 45 years old. So that's the period where your vision changes the least. So before 21, your vision can change. And then after 45 years old, your vision, you start getting where you need reading glasses. So this particular this column or lens is not appropriate for older people. So it's also good for people who aren't good LASIK candidates, those people that have dry eye or just can't experience the lasers. And then you have to have moderate to severe myopia, and you can't have any astigmatism, and you have to have good general eye health. You can't take any medications such as steroids that interfere with healing, and you have to have had at least 6 months to a year of unchanged vision correction. And you can't be pregnant or breastfeeding, and you can't be allergic to local anesthetic eye drops. So the pros of this lens is that it's ideal for patients with higher amounts of myopia, 3 to 20 diopters. Unlike LASIK, you can only get the LASIK correction up to 12 diopters. So this lens is really great for people with severe myopia. It results in clear vision. It works for patients who aren't eligible for LASIK. It's minimal to no maintenance. It's completely reversible. It's a long-term solution, no risk of dry eyes, and no need for glasses or contact lenses after implantable Collamer lens. These are the cons and costs. It's not covered by insurance because it's considered an elective surgery. It has that, again, it has that age limit range. It's more expensive than laser treatments. It costs about $4,000 to $5,000 per eye. And because it's considered elective, insurance doesn't cover it. Then also the cost of the lens may also vary from one provider to the other. Regardless of the cost, the people who have had this implantable Collamer lens say it's worth having it if you're aiming for a long-term solution for myopia. So how's the company growing? I guess this was a question for ATRI. It's like, how is the company growing? So this particular company, they are taking different approaches to how it's marketed. So currently they're going to increasing the surgeon support and education, and they're actually creating centers where this surgery can be performed. They also have different types of other types of lenses they're producing. They're working on their production. and they're simplifying their ordering process, and they're also creating a delivery device, so it's easier to implant the device. And then currently, most of their sales are in Asia because Asia experiences a higher, or Asian patients experience higher incidences of high myopia, but they are also targeting growth in the US. So I hadn't seen this before. Usually we see like Q1, Q2, Q3. This company uses 2H, which means second half 2024. So they do their assessments based on 6 months versus quarterly. So this EVO is a type of ICL lens. So they're actually introducing a new lens family for China. That's going to be next year, 2025. So right now, so their strengths and opportunities, they're investing heavily to monetize the vast market opportunity, create a business that can become much larger over time. They're shifting their investment to surgeon support, education, and new products for ICL awareness, partly due to slowing consumer demand environment for refractive procedures. So they're trying, rather than having the patient ask for the lens, they're trying to get surgeons to be offering it more. So, and then they're increasing focus on the pace of this new ICL lens, the EVO, adoption from the diopter curve. So it's targeting the 6 to 8 diopter and above. So this is their weaknesses and challenges. Their macroeconomic environment has worsened globally since mid-September introduction of a 3-year plan. China refractive procedures slowed to flattish, with largest customers currently anticipating flat year-over-year growth in first half 24 and 10% growth in second half 24, resulting in full year growth of 5%. China accounted for approximately 52% of fiscal 2022 consolidated net sales. So with the Chinese or the China refractive procedure growth going flat, this has affected their sales. Okay, and so triple play, I wasn't able to do an assessment on that because, as you'll see, it's the value line is similar to Atrion, where they don't have a full value line. Shoot. Okay, but their EPS is trending up. Their growth estimate is 30%. They actually have a very high short percentage of float. So Piero was saying that, I guess it was Atrion had 6% short percent of float, and he was saying that over 10% is an indication that investors see the stock price going down rather than going up. Their quick ratio, they can cover their whatever debts by 5 times over, current ratio 6 times. They don't have, couldn't find the interest coverage. And then their debt to equity is very minimal debt. And then the operating income is trending up and their net income is trending up. This is their Bakul's financial ratios. It looks terrible. They actually, it's interesting because with Atrion, we adjusted the gross margin, number 6, to greater than 20%. But this company actually does really well on their gross margin. So I thought that was interesting. In 2022, things are turning around a bit for the company. In the last 2 years, the numbers are looking a little better, but historically, it doesn't fulfill Bakul's financial ratios. This is a quick comparison of Atrion and Star Surgical with the Bakul's ratios. Atrion has a much better management So I see them turning around more successfully than Star Surgical. But let's take a look at, let's see, for SSG. Actually, what I want to do is take a quick look at the stock comparison guide with ATRI and Star Surgical according to the SSGs. So historically, Star Surgical, I mean, with the growth rates and everything, like Piero is concerned about the historical sales growth rates being so low for Atrion, and Star Surgical's have been relatively high compared to them. But I don't know, I'm not so sure I'm convinced that that's a total indicator that this is a better company than that Star is better than Atrion. If you look at the industry averages, they tend to be more on the lower side. So, so this is they're both in the buy zone, and both have a similar rate of return. So I think it's, in judging these two companies, I mean, if you're comparing them against each other, it's like which company has a better potential to turn around. And I think it could be Atrion, just based on Bakul's management assessment. Okay, let's look at the SSG. So this is their SSG. The reason why they have not done well is because of COVID and supply chain. Supply chain has been a big factor for them. I think they do have manufacturing companies in different countries, but for some reason they've been impacted by supply chain. So let's see. Their numbers, I mean, their price earnings ratios are like crazy. So it was hard for me to do an assessment on this because I think it's Ann Cunha says it shouldn't be over 30 for the high PE. And even with the SSG, if you look at the audits, they say, yeah, do you want to rely on investors paying more than 30 times earnings for this stock in order for you to make money? I don't know if that's can be applied in this situation because their high PE have been so high historically. So I used 50 for their high PE. And then for the low PE, let's see, what did I do? I used this, I know I shouldn't have done this. I used the same, the forecasted PE of 50. I guess I should.
Didn't you just take the selected low price for
Which
the
one?
year?
This one?
No, you didn't. No, you didn't. I'm sorry. Go ahead.
I guess I could do this recent market low price.
What is that's 26.
I mean,
26.7.
I mean,
What was it before?
I had 19.
If the closing price is $3.85, it could go lower than that. No doubt.
Would you say?
If the closing price is $3.85, it could go
Uh-huh.
lower than 26.70 cents. I mean, it could go lower than that.
The 19. Maybe I should make this 40.
20.
Whatever that one was, yeah.
I could do
19.5.
I could do 15. Oh. So if I do, I don't know if it's going to drop. Well, I guess it could drop to 15. It's really hard when a stock is on this kind of trajectory. But
yeah.
And the percent of float is they're anticipating to drop even more. So let me see, 80%. Yeah, 80% of the 3085 is $24. So
Hmm.
yeah, I don't know. I guess it could drop significantly more.
This one is tough.
Yeah, that's a tough one. Yeah. I think the potential to turn around is greater on the Trion than the Star Surgical.
And even having
Strangely,
a PE of 50 is awfully high.
it is.
Yeah, that's 35 is kind of stretching it.
35 is stretching it, but not for them.
Yeah, I mean, can you see 35 when it's been this, like, yeah, so high?
Mm. Yeah, you're not going to get anything close to a buy on that.
Yeah,
On 35, you're not.
yeah. Okay, so I actually wanted to, oh, did I have, can I add in the stock, in the comparison, can we add RMD in here? Do I have that? Oops. And then Jane, oh, this is old, let's see. So just as an FYI, it would be great if people would put an ITK, when they do their stock studies, put an ITK in there, and then we can do stock comparisons.
We're going to have to figure out something other than the ITK because pretty soon that's not going to be available.
Oh, really?
Yeah. BI is stopping support for that.
Okay, let's see.
Well, how do we share SSG so we can manipulate them then?
You can
How do we do
email them,
that?
actually. You can email whatever SSG you have. You can email it to people. You know, you can
Okay.
email them a link, and then on the link they can click on, and the SSG comes up as long as they have
So toolkit is
plus.
Okay.
toolkit is being phased out.
Yes, eventually,
That-
yes, they're
Wow,
beginning to withdraw support for the
yeah. He,
toolkit.
Doug Gerlach said that about 3-4 years ago in Orlando Money Show conference, it will not be supported for any improvements, but he did not say it will be
Yeah, but
completely.
that means when it starts going bad, they're not going to fix it.
Yes.
Yeah,
But
so
I
what,
think it takes too much to do the SSG core and plus and all the other stuff for them to also be, spending time and stuff on toolkit
Yeah, but
when
yes,
maybe not that many people use it. They want people to use the SSG anyway. So
and I
nobody.
think,
SSG is slow and online and okay.
yeah. Oh, I think the RMD, I didn't have a current version of it. But anyway, I wanted to do a compare because I think, and then Hanny wanted to pitch MedSpace, and what was the other one?
Medpace is good one. He pushed some
SMLR.
Israeli stock.
Yeah,
What?
SMLR.
Sorry, I didn't hear that.
SMLR.
SML.
SMLR. Okay, yeah. Yeah,
I
when
don't-
we found out, yeah.
And then
But Medpace is, by the way, Medpace is doing good.
it's MedPace.
Yeah, I suggested me and who was my partner for homework. We found Medpace, a domestic company. It's doing good.
price has gone up recently,
Well, doing good.
quite a bit
Yeah,
because it's doing well. So the price has gone up quite a bit. So
yeah. and it's domestic and no variables like what Israel company has current timing.
What is what is that? Semler? What does that do? What do they do?
Medical equipment.
Yeah, but what kind?
Yeah, but what do they do? I mean, there are lots and lots of medical devices.
All of these are medical.
I forgot all the details. I can dig it out. When we did the stock presentation last week, we presented all the details.
Okay.
Then I've been watching for since then. MedPace is doing really good.
So now I guess we should have time for discussion.
I got a question. When screening is done for the what other criteria is look for? It can't be just 52-week low, right? I mean, you got to have companies that have been doing well and then are hitting a 52-week low. I mean, what other criteria is used?
Oh yeah, we tried to do when we looked at the SSGs, we wanted to see this pretty much up straight, and then if it drops suddenly to get to the 52-week low, like what caused that, and is there potential for turnaround? Because if we saw something that was at a 52-week low that had a real, like you've seen those SSGs where it says can't, and we did see some that says, this is, not valid information because it's like,
Yeah.
if things were negative or, yeah.
I'm wondering if we should do the Bakul's ratios first and then look for the 52-week low. Companies that hit at least, let's say 75% or 80% on the Bakul ratio, and then of those, see if they have a 52-week low or at least closer.
We did. I mean, I have tried doing that. That's a lot of work. It's a lot easier to go to screen for low and then do Bakul's ratio than do all the Bakul's ratios and trying to find a good managed company and that's in a buy zone. I mean, we can find, well-managed companies, but they're not in the buy zone.
That's right.
I think that's what we've kind of had issues with in the past.
Mm-hmm.
Yes.
Yeah, true.
Yeah.
Especially in this environment where Bakul says, "Oh, I haven't bought stock in 2 years." Well, he hasn't found something that was in a buy, a well-managed company that was in a buy zone.
Yeah. Well, the entire environment has been low interest rate environment. So the only place to put money to earn anything is the stock market. That tends to push everything up.
Mm-hmm. Mm-hmm.
Right. So everything is overvalued right now.
Right.
You're talking to Bakul last time, right? Bakul says, go to the 52-week low list. Make sure the company that you center on or you pick is not going to die. Just make sure it's not terrible, and it'll go up.
Piero, I have a very general question.
Yeah.
Are the Buckles ratios score is important for all kinds of industries or only certain industries?
Well, okay, Bakul originally came up with his ratios for the technology companies, right? The tech companies have a big margin.
They're the ones that have the 50% gross.
Yeah, but the retailers like Amazon, they have a gross margins of about 3%, 4%, 5%, not even. So you can't use, Bakul's ratio of 50% gross margin to judge Amazon. You can't do that.
Well, most companies actually.
So we should formulate a few guidelines where and when Bakul's ratios are to be considered and put some weightage on that.
Yeah. Oh, also Bakul said, and many other people say, look at their peers. Where do they compare to their peers? Compared to their peers, right? If the peer average is 10%, it's no use screening for 50% margins, right? So if your candidate company is first among its peers, great, buy that.
So
but if it over time begins to move down to second, third, and fourth among its peers, then you know there's something wrong.
okay, that means when we is suggesting that we should consider peers, that means
Yes,
it depends on the industry.
That's right.
Yeah, total score or maximum score.
Yeah.
Depends on the industry which we are looking for.
That's right. Look at the industry.
Yeah.
What are the scores for the
So we
industry?
have to do some work in terms of figuring out what the industry numbers are.
Yeah.
Yes.
Look at the
We can't just
So-
look at
sorry.
we can't just look at that spreadsheet thing and say, oh, it doesn't fit, or it
Doesn't
doesn't
fit.
make it, or it
I
fails,
think-
because that may not be absolutely true.
Sorry, everybody. For sake of time, I think we need to probably table that discussion, move on to the annual reports. We're running pretty tight on their deadline, so we can have a chance to review those.
I think
as well.
I think that's a good project for Ela. I think.
Oh, thank you.
Okay, so let's move on. Kiera or Jane? Kiera or Jane, do you want to discuss?
Whichever.
I can go.
Okay,
Okay.
Jane, go.
I'll give Jane the screen
Okay.
if I can find it. Okay, because
Okay. Can you see my screen right now?
yes,
Annual report.
yes.
And Vertex, VRTX, has another great year. And as you can see, we have divest about 20%. So we left with 32 shares. And the average cost is 212. So the current price by last Friday is 422. So as you see that it's grown significantly. And the current PE ratio is 30.7, and the average 5-year is PE 23.5, and the low PE is 20. So currently the PE is comparatively high compared to last 5-year average. However, as you can see later, BRTX has a very broad pipeline with a diversification of products. And so it still has a lot of potential for the price to rise, the share price to rise, I believe. And the revenue for the whole year is $9.9 million. And for past last year is about 8.9. So the revenue has increased by 10.5% this year. And this quarter 4 is 9.3%. So as you can see, the revenue has slightly, the growth rate for the current quarter is slightly less than the whole year growth rate. However, again, as I said, it has a lot of a big pipeline, so I'm sure the revenue growth rate will continue. And the total current assets for this year is 14.1 billion, and compared to last year is 13.2 billion. And the current liability is 4.5, and the last year is 2.7 million. So the current ratio is 3.11. It has declined from last year, 4.83. The cash flow also has declined slightly from last year, 3.8 million. And, so if we look at the stock, if we look at the earning release, the revenue has continued to grow. As you know, this company is the the world leader for cystic fibrosis, and CF. It's a lung disease, a very serious lung disease. And the treatment for each person is tremendously high, like thousands of dollars. And the company has successfully expand the label to younger patients, like 2 years and above. So also the company has expanded tremendously well internationally. So they have a lot of customers overseas as well. So it has remained its dominant position in treating CF worldwide. And also it continued to innovate its products. So the current CF product is Trikafta, and in Europe, in EU is Kaftria, and it's expanding to innovate. The company had innovate the treatment and has successfully I think has successfully expanded to a new drug. It's called triple therapy. Let me see where I have that. Triple therapy. Okay, here. It has worked with Moderna to explore the genetic therapies, and this has been in the news that the company is trying to replace the current drug with this triple therapy. And it's I mean, all the test results, the data have appeared to be doing well. And also the company has successfully got the approval for this new gene edited cell therapy called Casgevy, and it's for sickle cell disease. And also the company has successfully got this pain drug for a lot of pain, like moderate to severe acute pain, and for the neuropathic pain, and for the diabetic pain, diabetic pain, all kinds of pain. So this product VX548 is really it's going to be a big hit, and it's currently in the phase 3 study. So the R&D opportunities for CF are vast beyond this lung disease drug, and it has a lot of different products in the pipeline, as you can see here. That they have different products in different stages, like phase 1 all the way to phase 3. And the most recent approved drug is Casgevy, and that's for what we just went through, Casgevy. That's for sickle cell disease. So all these are very serious diseases, and they are rare, but the population worldwide is huge. So that's why it supports Vertex to continue to do well. And Vertex has provided its next year's revenue guidance, and it's gonna earn about 10.5 to 10.75 billion sales next year. And this is not even counting the new the additional approvals. It only counting the new drug that will be sold in US and EU. It also counts the CF, the lung disease drug, including the new drug, the triple therapy, will be sold worldwide. But it hasn't count other drugs that will be approved and sold in new territories, because the the timing is hard to predict. So Vertex, this revenue guidance is relatively conservative. And Goldman Sachs has increased its 12-month target price for Vertex to 578, and it has increased from 440. And the value line 18-month target price is 356, but that's very close to, actually it's really, because it hasn't, value line hasn't issued the current report. So that is even lower than the current price, 422. So we wait, I think value line report will come out very soon, probably in a week or so. And as you can see from the SSG here, sorry about that. So based on the SSG I did here, as you can see from the study that I did on February 15, last week. Sorry about that. I should have uploaded earlier. Takes a while. Sorry. Okay, comes out. Okay, when I estimated the SSG, I usually refer to value line and Goldman Sachs estimates. But as you can see, value line, the report is December, so December 1st. So this may not be updated. So I kind of look at prior year. As you can see, the prior 5 years growth, sales growth is 23.3%, and then the earning per share growth rate is 28. So I just use, conservatively, I use 10.5% revenue growth, and I use a preferred procedure to calculate the earning growth rate. Oh, I don't know why it's. Anyway, so I use that to calculate the preferred, to calculate the earnings per share's growth rate. So it's 10.1% earnings per share growth. So based on that, we look at the average high PE. The average high PE is over the 5 years, 28, about 28. So I take about 10% discount to get 25. And the average low PE is about 20. So again, I take about 10% discount, so it's 17.1. And I got this $627 in 5 years, compared to the current price is 422. Again, this doesn't, this estimate is very, very conservative because I'm not counting all the potential revenue from the new drugs that will be approved, not only in the States, but also overseas. So based on this conservative estimates, I got the hold for this stock. And the current price, 422, is rather high because it continued to increase after we sold 20% of our position. However, I don't recommend to to purchase. And but I look forward to seeing this company to continue to grow in both its revenue and its earning per share. And currently, we have about 17% of our total portfolio in this stock. And if we look at the 10K, yeah, if you look at 10K, I have done based on Ron's checklist. I have done not checklist, based on Ron's methodology. I have done observation on the financial reports. I'd like to share with you. Okay. So, okay. So Ron's has shared with us his methodology of observing financial statements. Start with cash flow statement. I mean, usually I don't look at 10Q as closely as I do on the 10K. So I thought it's worthwhile to do this since we have been through this, and it's good exercise. All right, so we look at the cash flow statement. This is a cash flow statement. So as you can see, Vertex, if you look at the cash flow statement, okay, you look at it starts with net income, and then the adjustments for all the non-cash items from operation is here on the top to derive at this net cash provided by operating activities. So this is operating cash flow. All right, and then in the middle part is investing activities. So this is we can see how the company allocate its cash, okay, either to purchase equities or debt securities, or to purchase the property and equipment, or to acquire companies. That you can see that you pay for the intangibles. So usually this is from acquiring companies, existing company. And if you see that it's purchasing the property and equipment, then that's for organic growth. They are trying to develop business themselves. So you can see this year, last year, there's no acquisition per se. This year, they have purchased something, and there's some intangible assets they pay for. And also this year, as last year, it has invested in property and equipment. So Vertex grew organically in 2023 as well as 2022. It always does grows organically. So it's spent about $200.4 million on property and equipment this year. And also Vertex purchased the debt security quite a lot of amount compared to the last 2 years. You can see it purchased 3.7 billion debt security this year alone. And also the debt security they have purchased before, it has either matured or been sold, and they are cash derived from this. So this year is 839 million compared to last year's 920 million, which is normal, on the average. And also it sells equity security this year, not in the past 2 years. It also sold equity securities and derived 95 million from this from these sales. And also you see, we mentioned earlier that Vertex have made some payments for finite lived intangible assets. So that's in relation to the new regulatory approval that we got for this gas gift, whatever that new drug. So that's in relation to that. They have to pay for that. So it's not acquisition, sorry. It's not a new company acquisition, it's for the new drug. They pay for some regulatory approvals. So that's for that. Also, Vertex repurchase its shares. So last year it didn't repurchase anything. This year they repurchased its common stock, and they pay for that. However, the share counts haven't really decreased because they have issued some new shares, and they also have withheld some shares. They actually acquired some shares in connection with the common stock withheld for the employee tax obligation. Whatever in other words, the share count didn't drop because of the stock repurchase, and that doesn't really help the EPS. And they are not trying to inflate the EPS by doing that, by doing the stock repurchase, because the earning per share is growing in a very healthy manner, so they don't have to do that. But anyway, so I just want to point that out to you, that when we see the stock repurchase, then the share count may not decline as a result.
Jane, before you move on, what is number 2, cash flow, number 2, available for sale debt securities? I did not understand.
Okay, I didn't. I think it's a debt securities that they can is readily available for sale, so they can sell it. They don't have to wait until it's mature. So if you have, for example, you invest your cash, your money in equities, you can invest in the debt securities. You can invest in government loans and things like that. So they have both equity securities. They also have debt security investment.
Okay.
And Vertex has not paid dividends for the past all years, but purchased the shares. So somehow we were hoping the share count would decline, but it has not. And we look at the balance sheet. Okay, so I just mentioned about the share count, right? So you can see this year the share count is 257 million, and 257.7 million, and last year is 257 million. So it has increased. On the contrary, yeah. Okay, so balance sheet, my observation would be the long-term liabilities. So I always look at long-term liabilities. And so Vertex other long-term liability has increased to 877 million this year, from last year 685 million. But the company is still reasonably indebted. As you can see, it's nothing compared to the total assets or even the current assets. They can pay for that easily. And so both short-term and long-term marketable security have also increased significantly. I mean, not compared to the total asset, but significantly from last year. And so these are described here, so I'm not gonna, but you can see the number, 849.2 and 2.5 billion. So they have invested a lot in marketable securities, including the debt security we just mentioned earlier. All right. So other intangible assets has also increased to 839. So we always look at that because we want to know whether there are a lot of unreasonable intangible assets that have been recorded, but it may not be worth, you know, as much as they wish or on the book. So we look at that, and as far as I know, the increase is related to the drug, the new drug. It's called Casgevy. Casgevy is a new drug, so it has to pay for the regulatory approvals and things like that. So that's in relation to that. And also, that we mentioned about the shares count, right? So the share counts haven't decreased because of the stock repurchase, but because the company continue the operating income that you can see continue to grow, the net income continue to grow. So the EPS continue to grow. So I mean, the stock repurchase is healthy, is there to help, but it does, even though it doesn't make the share count to decrease, but then the EPS continue to grow at a very healthy rate. We use we use a very conservative growth rate, EPS growth rate of 10.1%. Yeah, but as you can see that this is more than 10.1%. I mean, last year, 2023. Yeah. Okay. It's about 10.1%. Yeah, it's about 10%. So it's I'm using that the same growth trend. And so I recommend we continue to hold Vertex. Hold on. Okay. So income statement, yeah, the revenue continue to grow because the CF product continue to do well locally and internationally, and they got this new drug, Casgevy. And also, but I want to point out one thing though. My observation for income statement is that the gross margin, which is the net revenue minus the cost of sales, that's a gross profit, right? And that is about like what? It's about 7.6 billion. 7.6 billion divided by 9.9 billion. So it's about how much? Oh, 87% for this year. And last year is about 87.9%. So both gross margin and net margin. Net margin is you take net income. Net income is here. You take net income and you divide it by the net revenue, and you get this 36.7% for this year and 37.2% for last year. So for both gross margin and net margin, they this year it has not declined. It just slightly declined, but has not declined much. However, its operating margin has been is trending down, at least for this year. So this year, if you take operating income, so income from operation, so if you take 3.8 billion divided by 9.9 billion, the net revenue, you get 38.8%. However, last year If you take 4.3 billion divided by 8.9 billion, you get 48%. So it has been trending down. The operating margin is trending down. However, I'm not that concerned just because the fact that a lot of revenue will be realized in the future because of the huge pipeline that we just saw, and also company is investing a lot in the research and development expenses. This year they spent about 3.2 billion. Last year they spent about 2.5 billion, and they also pay for the R&D expenses incurred by other partners, 527 million versus last year's 115 million. So they actually put a lot of R&D efforts internally or externally with the partners. So I think they are doing very well. And as I say, always Vertex has a great financial strength. It's A+ according to Value Line, and it remains to be a CF treating, a leader in treating CF condition and non-disease worldwide, and also has a diversified pipeline that we see in our report. The diversified pipeline in different stages, and it actually some of them are also already in the third stage, close to be approved. One I mentioned about is a triple treatment, triple therapy that is going to replace the current drug. It's called vanzacaftor. And then the other one is acute pain treatment, is VX548. And in addition to Casgevy, they also have done exocel product in other location regions, geographics. So these are the SCD and TDT. So these are all the products that are in the pipeline for Vertex. So no wonder, I mean, I haven't seen Value Line report because it hasn't come out. No wonder Goldman Sachs has a very high 12-month target price for Vertex. And 578 compared to the current price for 422. So we are hoping to see another 37% increase in the share price within this year, hopefully. That concludes my presentation. Thank you. Any question?
I have a couple of questions. Jane, very good and thorough presentation. I think I did the research on this one with somebody else 2 years ago, and bought a few shares. It's doing good, but the trifecta, their latest medicine, is very popular now and caught up with the market share. And the second question is, they have several medicines in the pipeline, but their narrow moat of cystic fibrosis, is it expanding to other areas?
Yeah. See, they are expanding to all different areas in EU, and then not only expanding to other areas, they are expanding the label to younger patients up to 2 years old.
Yeah, they have a dominance in cystic fibrosis, but they are the world leaders. I do not know how they manage it, but they are world leaders in cystic fibrosis, but a very narrow mode. Okay, in case some competition comes, okay, their cystic fibrosis goes down unless they increase their moat.
You have no worry about that because the competition is far behind. And not only the current drugs that you just mentioned, this drug, they also develop a new drug called triple therapy. And this new drug will replace its own drug. So it's in a world leader position. No worry about that.
Yeah. I wish I bought more, but it's doing good.
Yeah, definitely. That's why I recommend it to purchase 2 more times. But however, I understand the portfolio management. You don't want to have any stock to be oversized in our portfolio. So we need to trim it down. But it's good that we only trim down 20% of it.
Yes.
Any other questions? Hi, Jane. Joanne, I really liked your 5321. That's we should probably do that for our annual reports, right? It's a good practice.
Yeah, definitely.
Yeah.
What did you say, Joanne?
I liked Jane's 5321 analysis on her 10K. I think that we should all, if we have time or, want to make the effort to do that on our 10Ks. 10K, our annual reports.
Yeah, I like to hear more on that one too, that 5321.
Okay.
Yeah.
Okay, we're running out of time. I don't think we have time to go through Amazon. Let's do any motions.
Somebody can propose what Haney's motions that he was trying to suggest a few days
There was
ago.
1,000 of MedP and $1,000 of SMLR.
1,000 MedP.
Do we have SSGs on these companies?
It was done last month.
1,000 MedP, and what is the other one, John?
SMLR.
They're both listed on the agenda.
Okay,
Yeah, they're on the agenda.
Okay.
Yeah, they're both there.
Just because of my stock study, push to MedP. I bought just a very few shares. MedP, it is doing good for a month. I didn't buy any SMLR.
And I just want to say that Morningstar is giving it a 1 star.
Because the price has gone up so far. It's not Morningstar star is about the price. As long as the price goes up, the number of stars go down. Because
Which
then
one
it
you're
may,
talking about?
yeah. So in other words, the Morningstar price, the Morningstar star thing is about where the price is.
Valuation, yeah.
Yeah, so if the
Last
price,
price,
if
the
the
only
price is
one,
above the fair
value
value, yeah,
259.
if the price is above the fair value, then the number of stars is going to go down.
Okay.
It
Yeah,
has nothing, it doesn't have anything to do with the quality of the company. It has everything to do
Yeah.
with the price.
exactly. So if you look at Vertex, it only has 2 stars.
Yeah, that's
Morningstar.
because the price has gone up.
Exactly.
Yeah, it's not about the quality of the company. It's only about the price of the price of the shares.
So
I really
you might,
like my pace, except for the price, current price.
so maybe it's a watch or it's a
I think
limit.
it's a watch, yeah, because it's
Or
it's
limit.
gone up a lot in like in the last year. It's gone up a lot.
So maybe it's a limit order.
Yeah, that would be good.
What price would we want to buy it at though?
Well,
It's already almost $400.
I know, but the
And it's
52
probably
week,
it's not gonna drop down in the next week.
no, but it might,
I mean, unless the whole market starts to shake, then it might.
okay. Did anybody second the motion?
I did.
Okay, who's doing the?
Can you restate the motion, please?
It's listed in the agenda already. I think they're both listed out. But unless we're changing now, is there a limit buy and what's the price? I mean, if that's going to change, then I don't know.
How much are we buying?
Well, listed as motions for 1,000 of each.
Okay.
Oh, okay. Haney's motion, okay.
Yeah, Haney's motion. John seconded both of those. So we have $1,000 motion on both for both of those purchases.
Well, we're on MedP, right? If we look back at Joanne's Morningstar thing, it was like 352 was a 1 star for Morningstar, $352. And 3 stars is probably the fair value, 261. So why don't we just say 300 for 2 star probably, right? I would just propose just informally, not yet making an motion, but informally like $300 price. I don't know, I mean, is it going to get there? I don't know. May just go up. May just go up from here. But
not a big chance. Not a big chance.
John, a week ago, MedP was 324, and because of their earnings or something, he jumped to 391. So you are asking 300. I'm not sure it will.
That's not going to work. That's not going to work.
Yeah,
it's not going to drop down to 300 in whatever the time frame would be.
Okay.
Probably we consider 320 because the low price for February 9 is 320.
Maybe you can put 320. I don't know. It will work, but what is the time limit for a limit order?
What's the current price?
The current price is 391.
391, 392.
So 320 isn't really likely either.
Yeah, 320.
Well, we never know, right?
No, if we look at what's been happening recently, it's probably not going to get down to 320. Not in the next week, 10 days, 2 weeks.
We can adjust it.
Yeah, because of the recent news, it went up so much.
Yeah, it went up a lot. People are happy with it.
What do you propose?
Well, let's just vote. I mean,
maybe 330. I don't know.
Well,
okay.
I don't know that it's
I mean, conversely,
going to drop much below 340.
The other option is to leave the motion as it is and vote yay or nay on that with the current price. I mean, if it's not value, unless we can agree on a separate motion for a different price. I mean, we have that we have a motion that stands for the purchase of 1,000 at market at the current price. So if it's a good company and if some people want to buy it, they might want to buy it at the price it is today. I mean, I don't know, that's another option out there.
Well, Reddy and Jane sound like they're okay with 330. I'm okay with 330. We're just taking an informal straw poll right now. 330.
Yeah,
Can we amend the motion to 330 and be okay with it and see if we want to pass it or not? Yeah.
And what is the time? What is the time limit, John?
I think
When you put a limit order, we have to consider time limit also.
Sure, as long as we can. But I would say,
I suggest we do a time limit until the next meeting.
Until the next meeting, yeah. Because
okay, sure. Good idea. Okay, cool.
Okay. So I had to make a note. MedP 1,000 time limit is 330, right?
Yes.
Yeah.
Month.
Limit
1
order,
month.
yeah.
Okay,
Yeah,
1 month.
1 month.
Okay.
Cool.
Why are we putting a 1 month limit? There's a good to cancel limit order, right? If it ever drops, why do we put it at a month?
I thought the idea was that we could discuss it again and check in on it.
Yeah.
It's a meeting every month. That's the reason.
so that because of the cash, to make sure we have the cash for it.
That's a good point too.
Well, if it triggers, then we'll have less cash, right? I mean, you'll have the cash, and if it triggers.
Yeah, but what if we don't have enough cash?
Well, do we have enough cash at the moment? If we have enough cash when we
got plenty. We got plenty right now. We got 8,000 plus.
I think it's okay to redo it every month. I mean, every meeting.
Yeah, month is a good limit. Shorter than month is
a
little bit tricky.
Okay.
Yeah, I think we should.
We might get lucky and the price might drop.
Yeah.
Yeah.
Ela, I think stock is the
It's
company is
wishful
doing good.
thinking. Is that what you're saying? Wishful thinking?
No,
Okay.
that's a good company doing good, and
Okay,
that's
so do we want to
supposed be,
suggest
yes.
that as a technically separate motion? Do we want to just amend the current motion? Just 'cause I know he's the one that proposed it at 1,000. He's not here, so do we want to keep two separate motions on these? What we discussed plus the original motion, or should we just
No,
amend
no.
the motion?
Just
No,
do
Med
the,
P 3, I support Med P 330.
Okay.
let's
Yeah.
just do the revised one. John and Mina have to leave now, so I think we're going to close the meeting. I'm sorry we didn't have enough time to do the rest of the motions, but let's plan on doing the RMD and the SMLR next time.
Sure.
I think,
How about
You-
Amazon?
well, we
Oh,
don't
we're
have,
doing that next time. Next time is Amazon annual report.
okay.
And of
How
course, we
many
got
do
the.
we have?
What are our thoughts
have
about
next
starting
month?
the next meeting?
How many
with-
do we have next month?
Okay, briefly,
Before we
next month for the annual reports, if you have, everyone do your annual report as soon as you can, as soon as the annual report comes out from 10K, but if you have a buy or a sell, if you want to buy or sell, let me know. I'll check in with you as well, and you'll go next in March. The people that are holds can go in April or March as well, or April if there's lots of buys and sells, because we don't want to have buys and sells in April when it's already 2 months old. So that's the idea. So it's only going to be about half of the annual reports in March because we don't have time to do all of them. So that's the idea. Does that make sense to everyone?
And Isla, can you do the RMD update next time? So,
Yeah, because it's a quarterly. It's not an annual.
okay.
So yeah,
Right.
that can be quick.
We have FCX, Google, IPR, LGIH. That's Hanny, John, Reddy, and Mina and Isla for next month.
Well, I'm gonna check in with people, like I said. So those are
Okay.
the ones in the annual report column are going to switch around based on who says they want to buy something or they want to
Got it.
sell their stock.
Got it.
So they're
Okay,
going to switch around.
sounds good.
Okay. All right. I got to go. So see y'all later.
Okay.
Thank you.
All right.
perfect.
Okay.
Much appreciated, everyone.
Okay.
I would love to hear more from Jane Chen on 5321 procedure.
Reddy, we're gonna go to attendees, the guests now.
Okay. Okay,
Yeah,
Jane.
right, we can also pose that as an education topic in 1 month. I think that's a good idea as well.
Okay,
Okay, good night, everyone. Thank you very much.
okay, so we're gonna go to the
Thank you.
attendees for their comments. Hi, Brian. You're unmuted.
Good evening. I just typed in, I thought that enjoyed all the discussions and that, but I especially like Jane's Vertex presentation. And too bad it wasn't recorded and recording made available. And I think that it would be a Bing presentation would be worthwhile. That was an excellent job. Thank you.
It's being recorded and it will be posted to our YouTube station.
You're right. I can go in there and see it. Yes, thank you.
You're welcome. Thank you, Brian. Gary, you're unmuted if you have any questions. I know, I see you have a lot of questions here, Gary, so go ahead.
Hello, this is Gary Chan. Thank you for letting me listen and thank you for letting me speak. I do have a few of them texted, but I'll verbalize them. The first one was, so I'm able to get the value line and the Morningstar through my library. Is there a way to get the Goldman Sachs reports through library or some other free resource?
No.
That's the first question. Second is, who is Ron Brune? And you can make it very short on that one. The third one was, could you run through some ratios on the last, the one by Jane Chen, I believe? PE ratio, EPS growth, sales growth, revenue growth by percent. I mean, I don't know if that's really relevant at this point because you're ending the meeting, but I think to make it comprehensive, those would be very valuable because if I know you guys didn't do the or maybe you did the SSG, but I didn't see where you kind of have the graph of the revenues, minus the gross expense or the expenses for the net profit type of thing, you know, the lines that usually do. But I'd be interested in seeing if those growth percentages are above 15% or what, you know, what those would be kind of as a general rule of thumb. And the other thing is I would comment just immediate thought on any sort of, I personally kind of just stay away from biotech because you don't know when is their next, if they're going to pass the FDA approval process. Because if you know anything about biotech, usually it costs in the neighborhood of billions, potentially hundreds of billions of dollars just to do to do a drug discovery. And you look at thousands of potential drugs and then you end up with one, and you might go through phase 1, phase 2, phase 3, and you might fail at the very last step, spend billions of dollars, and then that money's just gone, you know. And so it's like a big numbers game. And so that drug discovery is never it's never guarantee, it's never ever a guarantee. And so if you ever look at biotech, it's usually like up and down, up and down, up and down, and sometimes it might be up and sometimes it might be down, and sometimes you get lucky and it moves up, and then, you know, and that's just the whole process. But if you think that, you know, over, let's say, 5-7 year, you have to know how often is a patent going to be renewed? Because is it a 7-year patent, is it a 20-year patent, and are they going to renew those? So that can also get much more detailed, and everything's it's all moving ball. It's all like revolving door there. Like I don't know. I mean, that's my short end of the, you know, answer for that. But go ahead. I'm listening for answers on the questions.
Thanks, Gary. For the Goldman Sachs reports, all those kind of analyst reports you usually get through your broker. So do you have
I have Fidelity, I have Schwab, I have TD Ameritrade. I'm looking at getting an E-Trade account, and also I'm looking at Vanguard, because Vanguard, actually, I just did some research. I found out Vanguard gives 5.28% on the brokerage accounts, and I'm looking at trading options. So in any case, your brokerage fees are going to be so minimal that the interest rate sitting on the account, I don't know. Long story short, I'm looking at a Vanguard account because it gives 5.28% cash sitting in the account, kind of thing. But
Can Jane tell us where she gets the Goldman Sachs report?
You have to have an account with Goldman Sachs to get the report.
oh, okay. So Goldman Sachs, are those like free? Are those
Oh, no.
brokerage accounts, or is it like $1 million kind of deal?
It's a brokerage rate account, and it really, they charge high fee commission for that, and they require minimum balance.
I see. Well, good for you that you're able to get access to those.
Yeah.
But I know there's a lot of free resources. Fidelity has their own access for different analyst reports and stuff like that. But
Yeah, but it's not free. You have to have an account.
Fidelity's a free, and Fidelity doesn't charge anything for their reports.
Oh.
And
Okay.
No,
but yeah, I understand
you
what you're
have
saying.
to have an account with Fidelity to get to their research.
And Fidelity doesn't charge anything for their research, and Fidelity doesn't charge anything for their accounts.
Doesn't Fidelity pay around 4% for a SPA access? I think cash account.
Yeah, you have to have an account with them, money in their bank, in order to get to their research reports. You can't just walk in off the streets and get a research report from Fidelity.
Yeah,
you can. You can open an account with $0 balance in it and get access to the reports.
Okay, can we move on for a second?
And you don't have to pay any monthly fee for the Fidelity account.
Okay, thank you, Gary.
But the minimum balance for a Fidelity account is 0, and you could put a penny into account, and you can get access to it for free in Fidelity.
Okay, great information. We just want to let you know that Ron Brun was a former
mentor.
Yeah, mentor, but he was a BI, longtime BI member who did a lot of kind of instructional type of webinars, and he would join our group occasionally and give us advice. So he was well respected. He had a lot of great tips and techniques to analyze outside of just the standard SSG. So that's Jane took his 5321. It's kind of an assessment. It's very it's not it's more of an art than a science. Yeah.
Yeah, I
And
agree.
Jane has really perfected that. Okay, I just want to run through your questions. So the ratios, that's just, I mean, Jane did not present her SSG, but
I did.
yes.
Yeah,
I
she
did.
did. She
Oh, you
did.
did present SSG?
Yeah, she showed it 2 or 3 times.
Okay,
She
sorry.
did. She did.
Yeah, I didn't see it myself. I
Yeah,
didn't see
yeah,
the
yeah. She
SSG.
had
I
it.
didn't see
Yeah,
the graph, the
she
bars,
showed it at
the
least
bar chart.
twice. Yeah.
Okay, so you might want to look at the recording. We have a recording of this.
Well, even if she did the SSG, it doesn't necessarily have the PE, the sales growth percent, the revenue percent. It doesn't necessarily have those in that.
Oh,
Well, you
because
know what? You can go and Google how to calculate that. Because Jane
Well,
briefly
okay,
went.
then I'm just bringing a valid point that wasn't, see, either you missed it, I missed it, or 2 or more people missed it. And so I think those are important, very essential components to doing an analysis that
What did we miss?
weren't in that comprehensive analysis.
Well, we don't. We have to. You know, for the sake of time, we pretty much go through like a standard overview. We don't really get into super details, but
Well, PE, EPS growth, sales growth, revenues growth percents aren't super detailed. They're just numbers that could be
But
yeah.
the
described in
SSG
the
has the
numbers.
PE on it. The SSG has a PE on it. It has a
And
history
then
of PE.
somebody also mentioned that they didn't hear it either. So
But okay, I'm just saying that the SSG that she showed, there's another sheet to it, and it has a history of PEs, either 5 years or 10 years, and that's all on the SSG report that she.
okay, do you remember what the PE was on that?
No.
No,
Well, then it wasn't
no,
very
I'm not supposed.
clearly done.
I'm not.
So
No,
that's
it's
my
not a
point.
matter of whether or not I remember it.
Well,
It is
someone else
on
also
the
mentioned that
SSG, right? But
they
it is
didn't
on the
hear that the
SSG.
SSG was
Maybe
done.
she didn't show that particular page, but it is on the SSG, and she did show the SSG.
Okay, Isla, we can move on then. Okay. Thank you, Gary. Enjoyed your
One other question. What distinguishes this model investment club international versus other clubs? This one's online. This one
yeah.
has people from worldwide or within
Yes.
the United States,
Mhm.
Canada, or I don't know, any
Mhm.
other things?
Mhm.
Um,
I'm from China.
You're from
Gary?
China?
Yes.
Yeah.
Oh, okay. Well, welcome. Oh, that's great. Any other world representation? Or?
We follow the BI fundamentals. We pretty much try to be, we're also a no money club. So we use virtual money.
Oh, interesting.
Mhm.
Because we don't,
So when you had the
Yeah,
pie
because we
chart
have
earlier, you don't invest any money at all? It's
no,
just a
because we have
virtual.
people in different countries and different states. So there's, currency exchange and taxes and stuff that would be involved.
Oh,
yeah.
interesting. So when you
So
guys approve a vote of investing money, that whole pie chart of percentages and diversification, all that, that's just a paper money deal, huh?
yes,
Yeah.
Oh,
our
okay.
treasurer contributes $1,000, or is it $100 per person every month?
Of
Virtual
real
money.
money?
Virtual money.
Of
Virtual.
what? Oh,
Virtual.
virtual. Okay.
Virtual money.
Oh, interesting. Do you guys pay virtual taxes?
No, we do
No.
not. If you try to avoid
That's a
that,
good
that's why
question.
it's virtual. Try to avoid that.
Well, that
That's a
means
good
you don't do bookkeeping, taxing, because by doing that
Right.
process, right, there's a learning process to that too. So I was just throwing that out there, but
Yeah.
We didn't
That
want to
whole
spend our time doing club operations. We're more interested in learning about how to invest.
and then you rotate different people on a schedule of who's doing presentations, right? Which I'm not sure if that's different or no, you assign different people to follow certain stocks, which is what
Correct.
this last table is.
Mhm.
And do most clubs do that or?
Yeah, usually.
Oh, okay. Well, thank you very much. You guys did a very good job.
Thank you, Gary. Karina, I'm unmuting you. Karina, do you have any comments or questions? or you're away from your computer, it looks like. Karina, are you there? You have to unmute yourself.
Oh, I'm so sorry. I couldn't find the little channel thing. But no, I thought that was amazing. Thank you so much for this presentation. I think it's my first time being here, so I just learned a
Oh,
lot and definitely more interested in, hopefully being in the next one. But no questions are asked. I think Gary had a lot that, answered my questions as well. So
okay.
I'm
Thank
good.
you, Karina. Yeah, and don't, if it's your first meeting, don't get overwhelmed. We all started out as beginners, and we're all here to support each other. You don't have to be an experienced investor. You just have to want to learn.
Right.
Okay,
Thank you.
you're welcome. Okay, so I think that's it, unless we have any other things to discuss. Are we good?
I think
Okay,
so.
Okay, I'm going to adjourn the
Wait.
meeting and stop the recording, and you can, so the meeting's adjourned.